depends on the promoter. I know a business that we're advising currently that's been in operation for the last 50 years. And for the first time in the entire 50 years, they're just thinking of funding. Now, what snapped for them? They're looking at their balance sheets, and they suddenly think they can optimize their balance sheet a bit more if they had some leverage, right? So would you call that an exogenous factor driving that need for funding, or it's driven by desire for growth by the promoters or the owners of the business? So it's just a combination of many factors. The conversation around scaling. If a business is thinking, I want to do more than what I'm doing currently, and they ask a question, how do I move from where I am to where I think I want to be? At that point, they look at their balance sheet, excuse me, and then decide if accessing or using funding to support their current balance sheet or enhance the capacity of their current balance sheet would take them or give them more mileage. Then they begin to have that conversation. So there's really no clear-cut time. I'm not sure there is any book or any professor somewhere who's written something about the appropriate timing for a business
to start looking out for funding.
Exactly.
Interesting. Okay, so maybe we should take the conversation then back to the very beginning. When a business...
Okay.
You're ready?
Yeah, let me come in. Yeah.
Okay.
Yeah.
Okay.
Good morning, everyone. Good morning, Robert. Good morning, Biodu.
Good morning.
The joy of technology has been showing me shaky here. All right. I thank you, Dr. J, for starting up the conversation. And I would like to just jump on where let me see, if you don't mind, let me continue from where Biodu was talking about in terms of there's really no point at which businesses would need funding. But your own estimation, how do businesses position themselves in terms of attracting funds in your own experience? And I also would like Robert to also answer that question. So how do we truly position ourselves in terms of attracting funding into our business in your own estimation?
Okay, good question. I think one of the biggest misconceptions about funding is that the primary driver is that having a good or a fantastic business idea already just positions you to attract funds. But it goes way beyond that in reality. In reality, we've seen that investors are more interested in things like the kind of execution capacity the owner of the business or the promoter of the business has brought to fore. What sort of structure have they put in place to ensure governance, to ensure proper risk management, even far beyond the original idea of the business. So that conversation is quite deep and broad. You're thinking, if I have to position my business today to be able to attract funding, then there are clearly certain boxes that I need to tick. I need to ensure that whatever that business is doing is highly sustainable. Investors or people who would fund your business are not looking to fund operational ideas or ventures that would most likely not stand the test of time. When businesses go through different economic cycles, how is the business structured to be able to withstand the pressure from those different phases of an economic cycle? They look at the promoters or the management, what kind of financial discipline, in terms of structure have they put in place in that business? And when you think about financial discipline, you think of governance, because somehow they can go hand in hand. So what's the governance structure? Even You can layer in other elements around something even as basic as, oh, is it this business idea in itself? Is it viable enough? Is it scalable? Um, can I move this business idea from serving 100 customers to scaling to serve 20,000 customers? Within what time frame? What sort of resources do I need to deploy? The structures must the business deploy to scale that business? So those are some of the conversations providers of fund will be structures or elements they will be looking to say, yeah, is this business positioned enough to begin to attract funding? Yeah, let me take a pause here so Robert can also.
You have listed a lot of things. Right now, you're getting me so scared. For the typical business owner, there's so many things that you have stated. But before I sort of probe further, Robert, what are your own thoughts to what your brother has said? Very important things on how businesses can position themselves to attract funds. What are your own thoughts?
Well, I think that Biodun hit it on the head. Most investors are not, they are not just looking for the business idea. The business idea can be great, but then what is the character? The character of those who are going to run the business. What does it look like? I say that investors will invest majorly in three things, but in their order of sequence. So they first of all want to invest in people,
Yeah.
and then the business, and then the market. So it's not like, because the idea is great and the projections are realistic, then they'll jump right at it. You have to look at the character of those who are going to run the business, the promoters, more or less. And that's why I say they will invest first in the people before the business, and then they go to the market as the third. So in that sense, then it's typical for, for clarity. I can box them right into like five major things that can get the business well positioned for capital attraction.
Yeah.
There has to be clarity. That's very basic. The clarity is, what are we actually building? And that's what Biodun was touching on when he said, the business idea may be great, but then, what's the character of people, running it, right? But then clarity in this sense means, do we even understand the business we are trying to? Yes, your the person that is, the promoter of the business, do you understand what you're about to run? This is not to say that you have all, for every business you will have the idea. First there's an incubation of the ideas, and then the ideas come up, and then you then try to see how you want to push the ideas. But sometimes you may not have it all figured out, right? But then you must have some sort of conviction that is driving you, and that's where the clarity is important. The credibility is talking about. So I'll talk about the second one, which is like credibility. That should talk about your character, your track record. What have you been seen to have done in the past? It's not so easy. Even if you have an angel investor, it's not so easy for somebody to just come invest in you when you don't have any proven track record. It's going to be difficult. Even your dad or your brother or your sister may find it difficult to put money on you. Yes, if you don't have a track record. That's what the credibility is about. Then when, it's good for us to be clear, it's good for us to be credible, but then the commercials, you understand, the commerciality of what we are trying to invest in is also important. The revenue models, what's the cost profile like, what's the profit prospects, I would say, and what are the opportunities for growth in what we are investing in. That's also important. Other things you now want to check will be how compliant is what we are trying to do with the law, because of course you're not trying to run something that is illegal. Then they make the fifth thing you need to do is communication. How do I communicate what we are doing or what we are building? Because you can get all the four right and communication is wrong, and you're not getting the business done. So I tagged it the 5 C's, the clarity, the credibility, the commerciality, the compliance, and of course the communication. So that is how we get our businesses ready. And what I'm saying is theoretical, right? Because if you get right there into it, that's when you will understand, and I think I have a bit of sense in it after, in the last 1 year, what I've been doing has been, in that light, trying to position a business, to also get investors in. It's a whole lot of work, but it's easier said than done. It is when you get involved. You know what it takes.
And Robert,
Yes.
and this is very interesting, and I thank Biodun for sort of setting the tone, on this. And Robert, thank you for putting a bit of context. So I hear you talk about clarity. I hear you talk about the character of the individual involved, and of course how commercially viable this particular product is. You talked about compliance, but ultimately is how do you communicate this particular idea? Now, so before you gave us this context, which I've noted, these 5 C's. You did mention that you look at the character of the individual, the market viability of the idea itself. I want to ask a question. What happens? And I want Biodun Robert to think through this. What happens when think about SpaceX, for instance, where the idea itself looked good, but the market was not ready at the time where this idea over 10 years ago, when this particular idea came. And today now we're talking about a multi-billion, I dare say trillion-dollar industry, this space exploration, space travel industry. So how do you, from your perspective as a venture capitalist and investor, all right, so what do you see in terms of, because when you look at Elon Musk, sorry to bring out his name.
No, go ahead, yes.
A great case study. Elon Musk this sort of fits the issue around character. I'm sorry, just in case they flag this down. But the idea seems to be out of its time. So how do you sort of measure that and still invest in a business whereby, the guy seems okay, there seems to be some form of clarity, but the idea seems to be far ahead of its time?
Well,
so
I think that
sort of gets you excited about it, so and invest in such idea.
You see, I'm going to be honest with you. Only an Elon Musk could have, pitched tent with SpaceX and succeed in it, and that is the truth. It's only an Elon Musk because of his own, of course, he was not coming from zero, right? If you wanted to explore that sort of idea, that is highly capital intensive. Highly capital intensive. You are going to have some cash on your own, because you cannot blame me if I don't believe in what you are doing.
And I agree.
You can't blame me.
But when I communicate this idea so passionately, we hear this passion and all of that.
The point here is that you can communicate it, but then I am thinking we have many planets that they are still discovering, right? The closest to us, they say, is Mars, right? And we are doing all this space exploration to go and live someday in Mars. Whereas the Earth, where I found myself, I've not fully explored.
So if I may chip in,
and then you ask me to come put hard-earned money in some project that may never see the light of the day. Because I also follow what is going on in the space exploratory world. And for me, the greatest challenge is how to get water into that planet. Without water in that planet, nothing is working. You are going to have to be spending a lot and doing a lot. And who knows? It's easier for government to spend on such projects, because for government, they are not seeking to make money out of it. For some of them, it's just to exert their authority, their power, their technology dominance and the rest of it. But for an individual, a private business person to explore space, it has to be in the capacity of Elon Musk. And of course, you can see that very quickly he had to realize that he needed to do something that people can at least relate with. And the valuation, what is driving his net worth now, are some of his efforts, in energy saving cars, right?
Yeah,
And all of
yeah,
those. So because he had to come to the level that people at least can understand. If you are 1 million generations ahead, because I don't know that even if this earth continue to run for another 1 billion years, I don't know how long it will take us to live in Mars. You understand? So it's like you are like 1,000 years ahead of your generation, and you two, you have just maybe about 100 years to live. So it's just it just looks like a kind of project that only an Elon Musk could have ventured into. But the point we are trying to make here is that, and I think you are trying to pick it from what I said about communication. If
yeah,
I am not, Elon Musk is probably clear about what he wants to achieve, but the people he wants to sell it to right now may not be able to see that at the moment, right? Because again, even if we get to be in mass, it will still be a function of how many people can afford it, because even a trip to space right now, where you just take a trip around the earth, outside the globe, and then you
yeah,
come back, will cost about $200,000, right? Which is a trip that will happen maybe within 1 hour or 2 hours, right? So if you are going to take that journey of about 6 months to Mars in space and stay there for some, you have to be one of the billionaires or one of the people on the on the list of top rich people. So, but the
yeah.
point is that compliance, communication to to the market about what you are doing is not just enough if there is no acceptance. So maybe there should have been another point, about the acceptability of the business, acceptability of the business whose idea I'm trying to push, and how much do I need this? Earth has not become unsustainable. Maybe by the time we can no longer live on Earth, right, that project will become a necessity. As it is right now, it still looks like something out there. It's like some sort of luxury that is not even clear what exactly we're doing. And I think Bjorn has something to say on that.
No. Yes,
I
yes.
was going to chip in
Thank you, Biodu.
while you
Please, your
spoke.
thoughts.
Yes, I was just going to chip in while you spoke, just very briefly. I think, given we've mentioned Elon Musk, he probably has one of the elements within the framework which we've already set on ground that is working for him. And perhaps that will be track record, right? Somehow, he has shown to have the capacity to take on some daunting business ideas
Is he using Otomoko?
and then take all of these ideas, find a way to monetize it, commercialize it, make it acceptable. So he sort of have a bit of a track record that might be working for him. At the early stage, he clearly probably doesn't need anyone's money to fund these ideas of ease, these out of the world ideas of ease. But at some point, you hear of IPOs, meaning it's of an initial public offer. So it didn't even come to market the very first day he butted that idea in his mind. He probably has had that idea over the last 10 years. There's a bit of a gestation period. The ideas running across the entire world, government hearing it, the business community thinking about it, the rich, the poor, also everyone from all sphere of life thinking about the whole idea. And all of that time frame, I think also has a role to play in terms of when you're thinking funding, when do I come to market to seek funding? Do you have a track record? You built a business. The business, have you built it in a way that it's showing track record? Track record is verifiable. Your financials, your records are properly kept, up to date, audited. And then do you give the business environment time to understand that idea, to interact, query that idea to a level where they begin to feel comfortable, even if the idea was out of this world? So I think that perhaps are some of the two things, I kind of two or three things I think is working out for Elon Musk. And I think is also applicable in the context of the conversation we are having today. Not to take away the fact that his ideas are, of course, always out of this world and they require mega $1 trillion to sort of fund them.
But you know, but to the principle that I hear both of you say, that irrespective of how outlandish your ideas are, it doesn't take away the fact that you need to put those structures in place, irrespective of it could be Elon Musk times 2. It's about putting the structures in place, doing the work. I mean, and that's one of the challenges we're having with a lot of entrepreneurs in this part of the world, is doing the work of putting the structure, building the credibility, consistently communicating your idea to the market so the market truly understands what you're doing and all of that. A lot of people just want to jump from 0 to 60 overnight, expecting that investment firms like yours will just wake up one morning and just dash money and save money is as free as that. But again, from the business perspective now, from the business owners, what do you think, in your own estimation? And I'm still going to get back to the Elon Musk issue, because for Elon Musk, when we have people like that, right? But let me continue with this question. We'll come back to Elon Musk. From the businessman's perspective, so as a business owner, what do you think we should look out for in terms of the loopholes, in terms of partnering with investment firms, venture capitalists, or going to the market to raise funds? What are some of the things that you think you need for us to advise us, right, to look out for before we just sort of plunge our entire business into the deep? Then that's one question. That's the A part. The B part of that is, and I want you to really help us, I want you to put them into brackets. You mentioned that really there's no point at which a business should raise capital. But if I'm a year 1, year 2 business, what do you think I should be thinking of or asking to looking out for in terms of raising capital? If I'm a year 5, year 6 business, or above 10 years, what are those things across those different brackets, right, or boxes, if you may will, do you think we need to look out for in terms of partnering with venture capitalists, angel investors, or investment firms? Any one of you can please put light into these questions, if you don't mind.
Should I go, boss?
All right, Robert.
All right.
Thank you, brother. Thank you so much. Robert, go on, sir.
Yes, Bill Gregg also happened to be my boss. All right. So, I think that most times there's this excitement about raising capital, that gets every business excited.
Yes.
If I've been able to build something, the next thing I'm thinking of is, let me raise capital.
Yeah.
Sometimes it's not like those businesses are trying to mismanage those capitals, so to speak, or to just take advantage of investors. But they just feel, if I raise capital, because in the world that we live today, once you say, oh, I built something and I raised funding in about $100 million funding, people look at you with a different type of high. So it's become something like a bragging right to say, oh, I raised capital, right? But what I think is this, and that brings us to where we started from, which is, at what point does a business require, to raise funding or to raise capital, right? It's important, and I will tie it to something else we said, which of course Bjorn also reiterated about track record. You know, before I go out there to raise funding, you know, what funding will do, you know, will be to give your business some sort of skill of something that you have already built, that you have tested and is working. So we can also relate track record in that sense. So even if you started your business with, you know, the monies you raise from your personal purse or with some other partners that you are both promoters together, and then you've built something, you know, no matter how small, and then you've put structure in place, you've seen the scalability of what you have built, right? And you think that you are at a phase, because sometimes the mistake people also make is that they think because something has worked, say at 0 to 1 levels, if we do the same thing we did at 0 to 1 levels, it will work for 10 to 20 levels. And sometimes we might be wrong. And that's the truth. It's good for us to have systems, right? But at 0 to 1 level, you're probably doubling as your head of HR, your head of risk, you're as far as also as the MD. But by the time you're getting to 10 to 20 to 30, if you don't want to kill yourself, you're going to have to hire head of HR. And then you are hoping that the head of HR will do it exactly the way you did it. You have the vision, you have the passion. The head of HR is coming to do a professional job and earn salary, may not have the same passion that you have, may not understand fully the vision that the company is trying to build. So again, my point here is that we cannot be quick to rush in raising capital. I must put a caveat. The caveat here is that, you know, there are some businesses that cannot even kick off without capital. And such is the space where I play. You know, without capital, you can't even do anything. You can have all the structure, you can have all the experience, you can have all, you know, there are businesses that will say, oh, you don't really need, you can start from where you are. You understand? It's not all businesses that can start from where you are. You understand? Because if you are going to be talking to the market, if you are going to be doing that business, you need all the regulatory licenses that you need to get. And to get those regulatory licenses, your capital must be spotted. Which capital is this business running with? It's beyond your own sweat capital or your intellectual capital or your experiential capital, if there's anything like that. So you must bring to the table real capital. So I think that's the caveat to that. But then by the time you started, you've put in the structure, sometimes it's good to also run and learn through the ropes, right? Learn through the ropes before you now think, okay, we are ready for funding at this point in time. And what funding we do, you know, which is another point. Some people take the funding and it's just to buy out the founders or the promoters, right? And then you hand over the business to some other people to run. And even when you are not handing them to other people to run, that's when people think, okay, they've run the business for 5 years, they've been able to raise $10 million funding, they should pay themselves, and then they are not paying attention to the business again. Meanwhile, the investor, I want to believe, is investing because they're expecting certain returns. And those returns will not come if you don't work the capital to generate those returns. Now, the other point is, what sort of capital am I even raising? Should it be debt? Should it be equity? And I think that's another conversation we can have, you know, but just so that,
we'll come back to that later.
Yes, just so that I don't, I can allow Abiodun also.
Thank you so much. In fact, there's so much. This is the challenge of having two experts in the room. There's so much wisdom. And then sometimes I'm losing track of the wisdom. But Biodun, because Biodun is going to give another level again. All right, Biodun, your thoughts.
Okay, so I mean, if we think of a technology startup, for instance, now that has a recurring customer base, it has very structured operations and structured reporting system. It has a very clear monetization strategy for monetizing its ideas, services, or products. That business will typically find it a lot much easier to attract serious investor conversations
Mm.
than a startup that is just solely operating based on projections and without any operational traction and all of that. So the whole journey to fundraising conversation first starts before first starts with investment readiness. So you're looking for us on this side, where our job is to look at businesses who are looking to scale, looking to optimize, and by long extension, attract funding. What do we tell them they need to have or put in place? That journey to being ready starts with the business owner asking many questions. Meaning they have to ask themselves some questions. Can they on their own even explain their business model very clearly? You're sitting down with an investor and you have a 30, what's that word again? 60 minutes, 60 seconds pitch. How do you clearly deliver or describe your business model? Can you demonstrate any form of traction? Is there any MVP, minimum viable product you've come up with? How are you able to deliver that in the market and scale? Do you even know the kind of capital that you actually need? So for us, what we tend to look at first, it starts with, and this cuts across regardless the kind of funding we're talking about. Robert was just going to touch on it. Is it equity? Is it debt? Is it hybrid type of funding? It starts with your numbers, your financial statement. How solid are your records? I've seen companies that have been operating for 20, 30 years that do not have solid records, solid financial statements. Yes, it comes at a cost, putting in those structures, having a very reputable auditor to help you, auditor/accountant, to help you put your numbers together, get them cleaned up, get them audited in a format in a way that is globally acceptable, because there are financial reporting standards that any investor from anywhere in the world will understand. What's your revenue history looking like? What's your cash flow projections, right? When you think about regulation, you think about taxation. Have you been compliant? You have many of these businesses always trying to, I don't know, is it avoid or evade evade taxes? Regulatory records, are you keeping up with those things? Because it's a reflection of your credibility of who you are. If you are not complying with regulation, then how am I going to trust you with my hard-earned money? What's your customer supplier data looking like, for instance? Are they robust enough? Are they clean? Are they credible data? Do you even have a very properly documented growth strategy for the business? So those are some elements or some key pointers a venture capital or an investment bank will be looking at to say, this business, are they ready for funding? Can I give them, can I fund them? What line of sight do I have into the business? Because when you're thinking funding for the investor, the first two things important to them is, when is the funding coming back? How is it coming back? And then what sort of returns are they getting? So if they don't, from the beginning, they cannot see a line of sight to those two questions, there, it makes that conversation very complex and cumbersome to have. I don't know if I did justice.
No, Biodro, and again, for me, you're really telling us the reality of capital generation in today's market. I mean, there is really no free money anywhere. And if we are thinking of scale, these are the realities that we need to cope and deal with. When both of you were talking, I'm looking at a young business owner, and some of these requirements, they're so tough. Because by the time you want to audit your accounts and you want to go to some of the big four, or because you will need very reputable companies, at least to a certain standard, to do audits. I mean, the monies they call for, I mean, Some of them will nearly want to kill you. You understand? Without really considering that you're a small business. Then some of those other requirements you just talked about in investor readiness assessments. So there's so much. There's so much. So for me, it's a challenge, right? As we're talking, my head is just going that I don't want to do business again. I want to come and work for your company. But the truth about the matter is that it's good. You know, I like to say that, you know, sometimes growth. Someone rightfully said, I think someone from I think it's Bain or BCG, I can't remember, consulting, said that growth creates complexity and complexity hinders growth. So if you're thinking of scale, it's a problem. So now for us now, you've mentioned a lot of things. Can you speak to, before we go into that question, please, if you have questions or comments, or you just want to give a different perspective, please, you can just signify by raising your hand. Please, we'll be glad to have you. Remember, this is a conversation. That's why I'm with my gurus who are just trying to really help us make sense of this reality. So how important is scale to any business? How important is scale? So we hear all of these buzzwords all the time. Scaling, scale. You need to scale your business. You listen to a Vuzi Tebakwayo podcast full of scale, or a Ray Dalio, and all of these fantastic names that we hear, and we listen to podcasts, or we listen to robots. I remember he's doing one of our Triad Masterclass when he was talking about the economy, all these big things. All right. Yeah. But these things are so important. How important is scale or scaling to the modern business? Any one of you? Let me start with robots that I go back to building.
Okay.
All right. Okay. You see, scaling, it's you can't just ignore scaling, you know, in the modern business. You can be comfortable at the level that you are running the business that you're running, right? But you have to look at the bigger picture, because if you don't scale on that business, some other businesses will come a month after or years down the line after you've started, and they will take you out of business. Scaling is that important. Okay, let's look at the Nigerian market as an example. So World Bank estimates that we need infrastructure funding of about $100 billion in a year. $100 billion in a year. Yes, 100 billion, because they estimated that over 30 years we need about 3 trillion or so, right? $3 trillion in terms of infrastructure funding. You know, talking about Nigeria only. So if we look at it in a year, that's about $100 billion. Now, a lot of investors are looking at Nigeria and they are kind of not sure whether they should come in. I mean, I think it was this week or probably last week. I was on a TV show and I was talking about, you know, investors and the recent reforms that we've had in Nigeria, and why it will still take, say, another 5 years for investors to be convinced that these reforms will stay. Because as far as maybe 15, 20 years, we've not been attracting as much foreign direct investment into the country. So the country that needs about $100 billion a year for infrastructure funding is attracting barely $4 billion in FDI. I'm not talking about foreign portfolio investment. Barely $4 billion in FDI, and I think that figure is not even correct. I think it's closer to maybe about $2 to $3 billion in a year.
Wow.
In terms of foreign direct investment. And here we are, the local funding institutions are not so interested because of the profit maximization drive. And not just because profit maximization drive, because the industry, on the regulations of the industry, is also killing those who are running within. I mean, we have a lot of issues, but let's lay down by the side. I don't want to lose sight of the question I'm trying to answer is, why is scaling important in a modern business? Because you see, that thing you're doing, if you can get it to scale, right? Not only are you going to see opportunities in how you can do it better, because if you don't scale, you can't optimize. I don't know if you get my point. You know, scaling will come with optimization. You mentioned something now, and I don't want to lose sight of it. That something kills. There's the way you
Growth
said it.
creates complexity, and
Yes,
complexity.
growth creates complexity, and complexity kills growth. Right? That's if you let it. Right? Complexity can kill growth if you let it. Right? You know. But then when as you're growing, of course, some complexities will come into place. Right? And as they are coming in, you are now innovating. How do I do it better? How do I, make things, how can I do things faster in such a way that the same thing that would take me, maybe 5 hours to do, I can do it much better. And the world is also getting sophisticated by the day. You understand? So the idea of scaling cannot be ignored anymore, because the business may not even be able to survive the next season without scaling. And I'm being honest with you. Do you know how many businesses have been disrupted by the use of artificial intelligence? I don't know how many people still contact graphic designers for their quick
with the advent of Canva and the rest.
yes, for their quick projects
Yes.
right now. And my bosses are on this call. And I remember in those days, it would take us, if you're having a presentation now, like a powerful presentation, you better start early so that you have about 2 weeks, 3 weeks. Some will go into 1 month preparing, depending on how important that presentation is. But that is what you now do by just typing a prompt on a chatbot, and then depending on the tools that you are using, if you have the right tools, then you have a full presentation out there, just like that. Do you understand? So the word is also telling us that, see, yes, we have to do things better. You have to focus on the things that are important. Not, for instance, in those days, to create a box, somebody will spend 5 minutes to create a box on a PowerPoint slide. You know what I'm talking about now. You now get the box, the right color mix, and all of those things. That is a complete waste of human time, because nothing is intellectual about creating a box on a PowerPoint. So the word is telling us already that we are going to have to focus on the things that are important, and not waste time on the things that are, less important, so to speak. Your presentation is important, but should I spend 3 days, preparing a presentation slide because my slides are important? So the point I'm making here is that we can't ignore scaling, and because scaling cannot be ignored, then the business must be well structured to attract funding. Biodu mentioned it. You are going to have to prepare your accounts, and you don't have to start from the big four. As a matter of fact, if your revenue profile for your business is 10 million and you are going for big four, that is not wise. I don't know if you understand my point. That's not wise.
Perfect, yes.
What is important is big four, they are thriving on the their experience over years, which is not dependent on an individual. It's dependent on the system they have built. You understand? Yes. So, but what if you find an accounting firm that will prepare your account and not make mistakes, right? They will prepare the right account such that at a later time in the future, when your business has now scaled, and maybe because regulation is now requiring that you are audited by the big four, when you present those accounts that smaller accounting firms have prepared, the big four will have no much variance, or probably no variance, because the accounting has been well prepared. If you get my point, the point is that yes, sometimes, except we are walking to the answer. Walking to the answer means that, you want to get that funding, and you have your target or some people you want to fund the account. You know that they won't fund it except the big four is by it. So, and that's why you have a revenue of 50 million, profit of 10 million, and you pay 5 million to big four to generate the account. For me, that's not really wise. The business has to scale, and scale gradually until the point, by the time your revenue profile is eating 500 million and you have a profit of 100 million, even if you choose to pay big for 20 million at that time, you can know that it's your cost, or it's the cost you are paying for where you want to be. Do you understand? When the business could barely afford it. But definitely businesses have to think about scaling, because that scaling is also what will tell about the future or the posterity of that business. The posterity of that business. And during the week, I was just talking about it, that how many of our businesses will survive when the promoters have gone, and we are seeing some of the signals, even in some of the banks, some of the banks that are listed on the NGX, some of the banks, as big as they are, and one person, can we imagine when one person is no longer in the affairs of things in the bank, will the bank remain the same? And such can be said for every other business. So, but we must get to that point when, of course, when the business has scaled sufficiently enough, depending on the interest and the willingness of the promoters, to now put in structure that will make the business outlast, the promoters, right? And I think one of the banks they've gotten to that level already. If I think about Stanbic, or I think about First Bank, those are banks that I think, people are just coming in and going out, right? Somebody is there now, the person can still go out, and the bank remains, because over years it looks like it's been institutionalized, to the level that is no longer rising or falling at the beck and call of one person. Thank you.
Do you see why having two professionals, there's so much. I'm trying to unpack a lot of things, but Biodun, please, over to you, because there's a question that I'd like you guys to tackle. It's in the chat box. Please, Biodun.
Okay. The question, yeah? Or I should speak on the scaling conversation?
Yes, your own thoughts.
Oh, okay. So, I mean, scaling in itself is a very important factor in determining long-term sustainability, or basically creating long-term value for a business. And the concept of scaling, again, might also differ based on the type of business, the industry where the business operates, and perhaps even the owner's objective. But when we think of scaling, what exactly does it just suggest or connote? Scaling is that relationship, is how a business is able to manage its growth in terms of revenue or output or profitability versus slower growth rates in costs of generating that revenue or profitability. So that means in scaling, you need to look inward. How do I make my systems or my processes, how do I make it efficient enough such that the cost of generating that output or earning that revenue is brought down to the most minimal level as much as possible. And that's where it depends on the type of business, type of industry, because not all businesses, not all industries have similar cost structures or cost profile. Some industries are exposed to exogenous factors. I think Robert touched on it. Foreign exchange, people are, they're importing items. Some have to deal with local logistics bottlenecks that could affect their cost. Some things they cannot even model, just happens randomly. But why is scaling important? And I think that's the question you've asked. And from my view, if you're thinking increasing profitability, like I said, mark your cost closely. Increasing profitability, how do I increase profitability? So that's a conversation around scaling. It's equally important when you think about even attracting investors, which is where this conversation looks like a chicken and egg or an egg and chicken situation. Which one should come first? It also shows you how you're able to build what we call in economics competitive advantage. So in terms of the sector I play, the product or the segment or the value chain where I play in that business, how am I competitively advantage position relative to peers in the market? Those are the bigger conversations around scaling and why I think scaling perhaps is very important. Those are, but then scaling comes at a cost, or you should think about it that there might also be risk to scaling too fast. Sometimes a business is much enough to begin to pursue some type of scaling or scaling infrastructure, which could come back to hurt them, right? If a scaling process is well not managed, it could lead to cash flow problems, right? It put into let's say operational breakdowns, right? And if care is not taken, it could affect quality, because in the process of you saying, I want to be mindful about cost, so do I reduce quality or quantity? It could begin to affect the quality of your output, which by extension affect your customer satisfaction level, or could fuel customer dissatisfaction. So there is still a bit of
and impacts your credibility eventually.
I'll pause here.
Oh my gosh. I was going to just on a light note that part of those exogenous factors would be people from the village chasing you. All right. But I really want to, both of you, thank you for sort of reinforcing a lot of things about the need to scale, about the necessity, and Jordan spoke to that. And sort of Robert also mentioned that about the necessity of competitive advantage. And you mentioned in practical terms that if you're going to scale, you need to also, there's a cost element to all of this, and that you need to think about simple steps of how you can become more effective and efficient without losing the quality of your product. And you also mentioned, which is such an important statement, which also would impact on investor readiness or the investor perception of your business, about at what point do you scale, that scaling does not also hinder the growth of your business. Like you mentioned, that there's a risk to it as well, that sometimes you scale so fast that you can also implode. And before you know what happens, you just get lost. Like WeWork, for instance, WeWork came up, they were all over the place, people were buying into it. But at the end of it all, it was all fluff. Now, the credibility of both the business and the promoter himself is completely, it's completely destroyed. I want us to look at this question, which speaks to some things, and this is from Abdulrazak. And I think it sort of reinforces what Bjorn spoke about earlier on about the tech space. He said, at what stage should a service-based business like a hyper-local delivery operational start or startup approaching our investors? And what specific metrics do investors want to see before they take the conversation seriously? That is one question. The second question he also asked is that most funding conversation in Nigeria seems to focus on tech startups with apps and scalable platforms. For a business built on community trust and physical operations rather than technology, what is the most credible funding story to tell? And which type of investor is most likely to fund it? Abdulrazak, thank you for making this conversation so grounded. Would anyone like to start? Let me start with Bjorn, and I come back to you can start on any of the questions that Abdulrazak, and I think these questions are so germane and pertinent to the conversation on raising capital. Your thoughts, Bjorn?
Yes, I agree. Just thinking, hyper-local delivery operation, that clearly is a service-based business.
Yes.
So the timing of approaching investors somewhat depends less on the age of the company. So it's not really a function of the age of the company, and maybe more on whether the business have been able to demonstrate a repeatable, scalable business model. Right? And the scalability comes in again. So I'm just trying to think about the question a bit further.
So do you want me to come back to you?
Oh, no. Let's
Okay,
when you're
okay.
thinking about the business, it's not really about the age of the business, right? So it could be in a 0 to 6 months or in its first year or 2 year, and it could approach the market or approach investors for funding. But like we said from the very beginning, right? As a business, no matter how short the lifespan of that business is,
Mm,
has it been able to demonstrate any sort of repeatable, scalable business model? So investors will be very, very more interested in seeing what, how strong is demand for their
your
product or
product.
service, rather. How strong is the demand? So the demand from customers, how strong is it? How consistent is that demand coming over on a month-on-month, given that it probably might have a very short time span? What are those, evidence that it has been able to show that the operation itself can scale, and then can it even show that, oh, if we continue on this path, we will hit profitability at so time period. If the business can demonstrate those things, I think it will help. Then talking about what are the kind of metrics for, if you think about a service-based business, you are not moving tangibles, you're moving intangibles. So what's important will be things like your customer acquisition cost. What does it cost you to acquire your customers? You know, I said one of the key things investors will be looking at will be the quality of demand you're seeing from your customers, because that helps them to begin to see at what point you can hit break even, you can hit profitability. Now, what does it take you to acquire that customer? If you're spending too much compared to what comparable businesses are doing in that segment or in that industry, in that sector, then that potentially puts that business at a risk of not being able to attract sufficient um, 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 investor. So right now, I think that's the first indicator that tends to come to my mind. What does it cost you to acquire customers? Then how are you able to retain those customers? So retention rates. So my conversation seems to focus a lot around customers, because that for the investor is the big question. How do you generate revenue? And that's where the the customer conversation, because from revenue, your cost is low, profitability can be seen, and then that conversation on funding can happen. Just take a pause here.
Oh, thank you so much, brother, and thank you also for emphasizing for us on this call. You can the importance of the customer is so key, and that's where Robert talked about clarity. It's important that you understand your customer decision journey. Where are your customers? What are they saying? What are the touch points? Are the touch points across your business speaking to the needs? And how are your touch points also speaking to each other in terms of gathering that data, helping you to become more competitive and, most importantly, more profitable? And I think the issue of customer such a but this is not the time for that. Thank you so much, Jordan, for sort of emphasizing the necessity of customer retention. Robert, please, your thoughts on the first question. And please, so Abiodun, please remember there's a second question he asked about the tech startups but looking at how does it communicate his story. Speaks to the fifth C, which is so important to the framework that Roberts gave us about communicating. Please think through that question. I'm getting back to you, sir.
All right.
Please, Robert, please go on your thoughts on the question.
Yes. So I think that what Biodun already outlined will speak largely to what businesses need to do in order to position themselves for capital attraction. But the honest thing we must say to ourselves now is that no matter what you have done in terms of the structure that you have put in place, there's a certain time in the business that if you require capital, you may not be able to get it from VCs or PEs, An investment banker or insurance house business may not be able to package you for an equity stake or a CP because the numbers are not just exciting.
Yeah.
At that time, you definitely need what we call angel investors, those who believe in what and being honest with you,
Yeah.
those who believe in what you are doing and can see the future. And permit me to share a personal story. I mean, I've been on the entrepreneurial journey now for some time, so my experience is still small, but then I can share a bit of it. And you know when we package our business, right, and we had some sort of valuation. When you are doing valuation, you'll be excited. Oh, this business, this is what it will do. Bjorn knows what I'm talking about. And you've done it to other businesses where you just look at the business, you just put a number to it. This business is worth 50 billion. It's just very interesting. But then when it comes to really funding it, you now get somebody to say, okay, this is the valuation of the business. And I'll be honest with you, we went to a supposed investor, right? The person is, capable enough to buy what we were proposing to him to buy, which is just like 5% or so of the company. And the guy was like, what am I actually buying? I'm not kidding you. The guy was like, what am I buying? Really, what is it that I am buying? You are putting the numbers to me as what the future of the business looks like that I cannot see now. And to be honest, with in honesty, between you and I, we are the ones that see the vision and we know where we are going and we believe in it. But the guy cannot see it. You cannot blame him. You see my point? You can't blame him. So at that point, I needed someone who would just trust that what we are doing is something that will pay off at the end of the day. And we got one that was an angel investor that just believed that, oh, what we are doing, because at the end of the day, the businesses that have succeeded today, and I name businesses, right, that have succeeded both locally and internationally. It's easier for people to write my story when the market capitalization of the business is already 5 trillion. They will tell you sweet stories that some people nobody will tell you the real thing that made them to hit it. I'm telling you, go to any of the banks that you have a founder behind them. They are likely to tell you their story because now they are 60, they are 70, they are retiring, the business is flourishing. It's easier to tell a story, right? But then in the early days, and all of the things they suffer, they may not be able to fully come out to say those things to you. That is when you need an angel investor. And I've seen those two where somebody that is capable investor refuse to invest because he can't see what he's buying. And I cannot blame him because if he cannot see it, he shouldn't put his money there. You see the point? But there's another angel investor that believed in what we are doing and put the money there. And my own job is to ensure that by all means, the guy that believed in me well enough to put his money there, doesn't regret it. You see the point? So there is a point where you need such investors, no matter, look at my track record, right? I have worked in, investment banks within the country, that have done so well. I was chief investment officer of one of the top ones, right? I've come out to stay on my own. And somebody is asking me, I can't see it. Do you understand the
drama you're blowing?
I cannot see it. So that is the reality of what we are talking about. But you cannot get discouraged because somebody said, I can't see it. It's a matter of time. I heard the story. I've not verified the veracity, right? Of one of the banks whose founder is still around was saying that somebody pitched money points to him, years ago, but he couldn't just see it and he just discarded it, right? And today, money point is a competition, whether they like it or not. To money point is a competition, even to the tier one banks. It's a matter of time. You see the point? So the point is that there will be a certain time when you need such investors who will not judge you by what their investment committee has already laid down. Because if you go to a VC, they have an investment committee. Your business will not scale. You go to a private equity, it's the same thing. You want to come to the market by public raise of capital, it's the same process, right? You want to go to a family office to raise money for you, they must do things by the books, and you can't blame them, right? So without touching on other things that I think what I've said is to be added to what Bjorn already eloquently mentioned. Thank you. Yes.
Thank you so much. So the second question, very quickly. Oh my God, time is really going. Gordon, look at the other question that says that most funding conversation in Nigeria focuses on tech startups with apps and scalable platforms. For a business built on community trust and physical operations rather than technology, what is the most credible funding story to tell? And this speaks to the issue of communication that Robert spoke to us about earlier. And which type of investor is most likely to fund it?
How am I sure this Mr. Abdurrauf Abdurrazak
Yes.
shouldn't pay advisory fee for this question?
Oh my God, he just is sneaking it in.
This question is very, 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 very spot on. Looks like he's on a transaction currently, and he's saying, because but coming back to it, it will be tough to, of course, the technology base is not there to serve as the storyline. It will be tough to use technology as, using technology to tell a credible funding story for a community-driven operational business. If it's a business that generates cash flow, so it will be from the community, the cash flow it generates is steady, is repeatable. Think about, I was having a conversation with someone a couple of days ago, and we were talking around an idea, and we're saying, oh, even if we bill them $99 every month, how much is $99 to these people? They'll pay it easily. Now, community repeated cash flow. So one of the stories you can tell is that community is able to generate repeatable cash flow that is current, that is repeatable. And then the community also has very, very strong unit of economics. And then maybe in the market where it operates, it has some form of leadership within that small segment, So I think those are some stories storyline you can build around. For me, from what I know about investing and funding, cash flow is critical. That community operation must be able to demonstrate, must show data to say that I can generate certain amount of cash flows on a repeated basis steadily. Now, when that is in place, you can now begin to approach investors. Now, what kind of investors can you approach? I think Robert already touched on it. At this level, at this stage, you need investors that all they would need to do is to believe in your vision, is their ability to see beyond what you don't have today, to believe in the long-term capacity of the vision you carry. And those are angel investors, right? Those are the guys you can speak to fund this sort of operation. You might think of some family offices. Again, if I think around impact investing, so if you can approach impact investors, so based on the narrative or the story around that community operation, is it making one that makes an impact in its community? What kind of impact is it making? So based on that story of the kind of impact it makes, you can also approach some impact investors who potentially would be interested in that kind of storyline. So just very high level, very summary, so I don't say too much, so at least I can still use something to build Mr. Abdurrauf.
And so that you don't, so that they can pay money. So Abdulrazak, we know you. We have caught you. Thank you very much, Biodo, for your sense on this matter. Robert, any addition to that thought?
I think Biodun did justice to it, so I'll just leave it there.
So, Abdurazak, are you okay with that?
Yes, sir. Thank you very much, Mr. Abiodun and Mr. Martin Robert. Thank you very much for that
Thank you.
detailed answering to the search to the questions. Yes, I'm very much okay with that, with those answers rather. Thank you very much, sir.
Yeah, they can see me later for consultancy service. I charge $10,000.
Oh, no.
All right. Okay. Thank you so much, Abdulrazak, for your comment. Please, if you still have comments and questions. Okay, back to the fact, we talked about Elon Musk earlier on, and I just want to now, so I have this great idea. I understand everything you have said, structure and all of this. So I'm a young person with crazy ideas. I really don't have any background in terms of saying that I have a track record that you can actually see. But this idea is a great idea, and there's a potential market for this idea. In fact, my plan, my business model, you understand, even though I've not yet executed, if properly done, has the potential to disrupt the market. But like Robert mentioned earlier on, certain businesses will require certain amount of capital for it to start, because there may be regulatory issues that you will need to align to. How do I start? How do I start? Because there are people on this call that have great ideas. They've seen gaps in the market, but where do I start from? Where do I start from? So I want your sense. Where do I start from, and how do I build from there in a very practicable, stepwise sense?
Okay, if I can go quickly, right?
Yes,
You see, ideas are great, and people have ideas. I mean, people have ideas. When we talk about ideas, I'm emphasizing it just so you know.
Ideas is flowing.
People have ideas. I don't know if you have heard about this. Is a show, but it's real for entrepreneurs. Shark Tank.
Yes.
Shark Tank. I mean, if you watch Shark Tank a lot, there was a time I was watching a lot of episodes of Shark Tank, and as we were talking about ideas, and I just remember there was a guy that brought an idea to Shark Tank for a Bluetooth device that requires a mini surgery. The Bluetooth device is permanent in your ear like that, and it's you don't need to be removing it when you are sleeping. It's there. You have to go for a mini surgery to implant that Bluetooth device to connect to your device.
Serious?
And the guy brought the idea to Shark Tank. And those guys were like, "Are you serious right now? Like, I'm going to go through a surgery for a device to connect to my phone." I mean, that is an idea. You see my point? So I'm saying that because ideas are great, especially if you are looking for somebody to come and put money there. That is why most people are not easily, I'm trying to mind my word now. They are not easily swayed. Actually, the word I wanted to use was different. But because of this call, let me use my other one. That most people are not easily swayed by the so-called ideas. So whatever ideas that you have, there must be a path to it for it to work. And I'm like, I've given you an example that, even for the kind of business that I talked about, and I said, of course, you needed some minimum amount of capital to get it done, right? Do you know that why that was ongoing? We needed to look for something that will do to still legitimately earn revenue without breaking the bank, without breaking the rules, without doing anything that is illegal, right? You don't need, like we haven't talked about now, you can use your expertise to give an advice to a business, and you earn your consultancy fee. Do you need a regulator to license you to do that? No, you don't. Do you understand? So, but for me to do nothing and to bank on my ideas and have somebody to come and put money there, some of those ideas, if you have money yourself, you won't put it there. I don't know if you get my point. If you yourself, if you suddenly wake up and the money you're asking others to put in the business, it gets into your hand, you are likely not going to put it on that idea. So an idea that is working or that will work will be in the works. That's my statement. An idea that will work will already be in the works before you get investors to come in. They must already see that you are already in that path of. And one of the things to show that your idea is working or that you have an idea is to leave your 9 to 5 and go and focus on that idea. That in itself it's some sort of sacrifice that will show, like that investor I was telling you about. When we got to that investor, the investor was like, so you left this particular job for this idea. I said, oh yes. I said, that's good. Even though he didn't put his money still, but he could see that, okay, if you were in his own mind, if you were stupid enough to leave that job for this security, yes, that means that perhaps there is something there, even though he's not going to put his money there yet. So there is nothing about the idea is good. If the idea is good, it will be in the works before you call people to come and work it with you. That's the way it works. I've used a lot of work. Sorry.
Yes, now you said that.
As Robert spoke, right? What came to my mind was, did that guy himself come to Shark Tank with the device already in his ears?
He didn't come with it.
He didn't come with it.
He didn't do the surgery himself.
He did. Look, I see. So he didn't put the work to work.
He didn't put the work to work.
Can keep on working.
In fact, they just laugh at him and sent him out. They kicked him out. As a matter of fact,
he should have come with his minimum viable product.
Yes, with his MVP, exactly.
Inside. In fact, you should be engaging the Shark Tank panel with the device.
Correct. But he didn't do that. But he asked somebody else to come and go through a surgery for a blueprint device.
So really, okay.
No, continue.
Okay, I mean, I was just going to try and wrap it up in a way that ideas are good. There are some ideas are very laudable. The process of birthing those ideas could be very supernatural sometimes, and sometimes it could be very natural, and they are very commendable. But the truth is, as humans, we tend to believe first in things we can see. Even there's a way the Bible put all of these things. You need to faith and work. You need to, even when there's faith, the faith still need to show workings, right? So, the whoever that entrepreneur has to be able to, whatever sacrifices he has to make, right, to develop a very, very tiny viable product to demonstrate that idea. They just have to go through that process. Because when people don't see this, then it's cumbersome to have that conversation. When they can see that minimum viable product, right? The conversations around even scaling it can be more tangible to have. People can begin to see and appreciate and understand what you're talking about. So if the sacrifice would be using their own personal resources to demonstrate as little as it might be what the idea can do, they have to.
That's
There's so much, there's, wow, we just have 3 more minutes to the end of this conversation. And there's so much, there's some questions here. So if you don't mind, let me just give you guys one minute each to just tackle these questions. So Dominion is saying that, please, what is the least capital a businessman is expected to have before bringing in investors? And Dominion says, thank you. All
I
right,
mean,
Robert.
It's not a number.
Mm.
It's not a number. I mean, like we've said before, right? It's not something that is cast in stones. So there's no minimum capital you require to bring in investors. If you are not in a regulatory business that has minimum capital, if you're a bank now, your minimum capital, based on the new banking recapitalization,
Yeah,
it's in the billions, right?
yeah.
If you're in the capital market, before now, it used to be millions, but now it has moved to the territory of the billions too. But if you're in your normal business that has no regulatory, prescription for capital, right? There is no minimum capital, so to speak. And like we have said, it's just that time is not enough for us to run through it. It's not every business that needs investors. You may have run for 10 years, 15 years, 20 years, and you may still not need investors. And I'm being honest with you. If you know the category of anyways, it's possible for you to run within 10 to 15 years and you've taken some form of capital, maybe by way of debt, because it will
Mm.
look like some of our conversation is maybe catered more towards equity, right? But then debt capital is also real. If you go as little as you go to your commercial banks to take a loan and you put it in that business, it's a form of funding for your business. Only that is a debt funding and you must repay with interests. So there is no time, so to speak, in as much as the opportunities are available and there is potential for whatever capital you are putting in to multiply, then it makes sense if you want to take capital. But what type of capital is what Biodun was saying, that you may need some advisory consultancy, so that Biodun is in that job, but I'm in there too. So you can
You can come
you
and
can
meet you
choose,
and have a
you
proper
can or you
conversation.
can go to Baba T to decide who is he giving it to.
Okay, okay, Brother, if you don't mind, I
Yeah.
want to ask the second question. There's another question here, so Brother can answer it, so I can manage. We can wrap it. So someone also asked this question. Brother says that given that deep tech energy innovations. Okay, so let me read that properly. Given that deep tech energy innovations typically lack the revenue history and hard assets required for non-recourse project financing, how can a startup break the funding loop to use such project-level debt as initial capital without first having a proven cash flowing asset? Shegun,
good.
now this is damn question. But
I
of
mean,
course, Biodun is up to it.
yes, good. From experience, it starts with your model. If you're talking project finance, which is what I'm saying here,
Yeah.
project finance, it starts first with your model. The model for that project, the cash flow projections, the cost projections, all of the elements, the revenue projection, at what point is the project recovering back monies, when cash leaves in year 0, in which year does cash comes back, what does it entail to make that cash come back. So you need to have a properly developed financial model for that project. Then on the back of that, you need to engage investors who understand project finance. So you clearly will need the support of an investment consulting service or investment banking to support you in this kind of conversation, because it goes beyond having very viable revenue, having tangible assets on ground that already gives that venture some level of standing. But you're talking here an entire project where you just define, this is the project, this is the estimated spend for the project, these are the potential revenue or cash flows from this project, this is the duration it takes to get those cash flows back. When those questions add up scientifically, when they add up, and the art, there's a science and an art to all of this, and the art of it, which is the project management skills, all of the other structures that need to put in place. If you require some sort of regulation or regulatory approval, have you gotten and secured all of those approvals? All of those things are in place. Then it makes the conversation of funding a lot much easier, even if you were to use a debt to fund that project.
Wow, thank you very much, Biodu. Thank you. And I think, like you rightfully said, you will need some expert advice to sort of handhold you through the process so that you don't fall into some of those traps. And thank you so much, Biodu, for that. Wow, I'm looking, our time is up, and I still have a lot of questions to ask. And I'm hoping that, I think we need to have a repeat, because for me, the other questions are around, okay, so what would you advise around debt financing, equity financing, and the hybrid that you also mentioned? What should I, as a business owner, what do you think should be my focus, looking at all these options that are available? Another question again would be, where are these opportunities for funding? We hear them, but we don't see them. Where are those opportunities for funding? And so I would like to take a pause here, because I'm hoping that I can convince the team to get you guys back again. Because I know you guys are extremely busy, but I think those are some of those other questions that I'd love to ask, but our time is up. But can I just take 1 minute, just do quick wrap up? So I'll start with you, Biodu. 1 minute, just give us your final take to us as business owners. Just one quick advice looking at 2026 and beyond. And the same thing for you today. Looking at 2026, one advice that you think, irrespective of where you are on your growth trajectory, that you need to think about regarding capital raise.
I mean, I think business owners should just be as realistic as much as possible with themselves, with their business, with the environment where they operate. I've advised businesses where we told them, based on what you have on ground today, this is your worth. If you want to raise capital, raise using this certain price. But the owner was fighting. Let me use the word fighting, that no, my business is worth X billion. And I'm like, it doesn't. Nobody will listen to you if you go to market saying this is what you want, because based on the numbers, you've engaged me. I'm credible enough to advise you. But because you have a figure in mind and you're not hearing that figure from me, then there's a problem. So they just need to be as realistic as possible. I think that's just the only takeaway I'll say.
Thank you so much, Biodu. Thank you so much. So business owners will need to be part of that risk is confirmation bias. You need to be really open to advice from experts and be realistic. Thank you so much, Biodu. Robert, sir, please, over to you, sir. Oh, we can't hear you.
I'm muted.
Okay, okay. Thank you, sir.
So I'm saying sorry to speak on what Bjorn already said. I said for me, the confirmation that the business wasn't ready for capital. The example Bjorn made was the valuation that the owner has in mind. So the owner has to wait some more time to hit that valuation. But if you must go now, then he can't get it. So I mean, generally speaking, right? If you take say between 12 to 18 months to raise capital successfully, depending on how high it is. So starting early is good for a business that has identified to really raise capital. Other things to note is to know your type of investors you are bringing in. Some investors will come in and crumble the business for you. Some others will come and make it better. So be sure of the kind of investors you're bringing in. We talked about relationship. Even if you're talking to investors, build relationship, your track record, your competencies and character, they have roles to play in successful capital raising. You must also demonstrate that you are capable
to run the business so that it's compelling for anybody that is coming to invest in you. Other things is you may want to protect your equity. Don't be too quick to give out to dash out equity. Sometimes you're starting a business because you too cannot fully, like I said, you have a vision, but you don't fully know where you are going. If somebody comes and throws money at you and you are quick to jump at the money, you dash out equity. I mean, and I had a bit of experience of that, but God helped me to save the situation. Dash out equity too early, but you know, uh, we were able to early recover it as well. So, and you must understand, of course, your deal terms. Plan for failure, even though you hope for success.
Yeah.
Then, but as you're doing that, you're building your track record. Thank you very much. Let me stop there. Yeah.
Wow. 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 I would really want us to have a repeat of this conversation. Thank you so much, Sarge, for taking out your time from your busy schedule to be with us at the Triad Masterclass series. There's a lot I have learned, even sort of reflecting on my own business and all that. And I thank you so much for also giving us the 5 C's in terms of a practical guide, from clarity to character to compliance to commercialization and of course to communication. It gives us a framework of how we can become investor ready. And also I really want to truly appreciate the fact that you need to also ask yourself to become more realistic in terms of how you evaluate your business. And of course, always seek expert advice, right? And don't give out equity early. Sometimes not everything, not all money must you take. You understand? So I want to say thank you, Sars, and also thank you to our I would like to say audience for just being part of what we're doing. Thank you for taking out the time, and I hope that you were empowered, and I hope it was worth your time. So once again, I want to celebrate everyone. So to all of us, can we really celebrate our 2 lovely gentlemen? This is me just saying thank you, Sars. Thank you for your knowledge and also being vulnerable, giving us free advice. Thank you.
Thank you. Thank you.
You're very
All right.
much
Have a wonderful evening. Yes, the rest of your day, everyone. Yes, God bless.
Bye.
Wow. Right.